Investors, if you're looking to witness or better yet experience the sheer power of dividend investing, look no further than this video right here because I just shattered another month worth of a dividend income record, bringing in over $400 worth of passive income, something that I know we are all after. Yes, even you growth investors, so buckle up, or I guess in our case, grab some popcorn, kick back, relax, and let's dive right in. So I want to start off by sharing the truth. I made a massive mistake this past month, and honestly, I'm almost embarrassed to share with you what I did, especially because I went against my own logic, which goes to show if it's not broken, don't fix it. Moreover, no one, and I mean no one, can outsmart Mr. Market. Either way, it was on June 7th, that fateful day when I decided to sell some shares worth of Apple stock around $196 per share. Now, I didn't sell out of the whole position or anything crazy like that, but I shaved 11 shares worth of Apple right out of my IRA thinking we were at a peak. If now some of you are asking why is that even considered crazy or a mistake, well, Tim Cook decided to announce Apple AI the very next day and the stock shot up to $218 per share, and my head was now, in that moment at least, hanging low. For the math geniuses out there, there's only about a $242 difference there that I missed out on in profit, but I'm afraid that over time that difference is only going to increase and, well, my head will just continue to hang low. However, my rationale for the sell, I thought perhaps Apple was in fact at a peak, as we really are, in my opinion, in a tech bubble. And hopefully Apple would then be, of course, on the come up ultimately over time, and I would be able to double dip in the profit jar from Apple. Yes, quite a greedy move. Again, all just goes to show you, more importantly me, the wise guy here, to just sit tight with my quality companies, buy them, and just for the love of God, do nothing but hold on. Anyway, now that I got that off my chest, portfolio-wise, I'm valued at $175,864.22, meaning I'm about $25,000 away from $200K, and just give me 6 months, I will be there. Now, the strategy as of late has really just been dollar cost averaging weekly into the S&P, given I haven't seen any real opportunities suitable for my portfolio, as I'm hyper-focused on just 10 holdings. And ultimately, well, when I open up my Vanguard app here, we can go ahead and take a look at the stock analysis of my portfolio to see 100% domestically invested in the United States, predominantly focused on large caps, weighting in at 84.17%. However, more growth oriented than not, as I am a younger buck and quite far from retirement. So yes, you'll see that I am heavily in tech, 47% worth of my portfolio, before tapping into healthcare and consumer discretionary at 14.4% and 11.9% respectively. All in all, while I am in tech, don't get me wrong, the investments aren't any type of risky bets, which just allows me to continue to sleep at night. Now, the beauty of dividend investing, as you all know, is, well, passive income. And this past June, we smashed through a new June record thanks to 7 dividend paychecks that hit my account throughout the month, which I am now eager to break them all down for you. However, if this is your first time here on the channel for a portfolio breakdown, let me just first say that I'm not only going to share how much income I received from each company, but I'm actually going to give you my thoughts on these companies based on our economic backdrop and how each company is trading right now, whether I see these companies as buys, holds, or sells, and then we're going to dive into my dividend tracker together so you can literally get a taste for the dividend snowball that I am rolling. Cool. All right, so let's rock. We're going to go back to the 3rd of the month. Thanks to Visa, ticker symbol V, I received my first dividend paycheck of June. Now, I've been talking a massive game about Visa. It's one of my stocks in focus for the year, and all because of 2 things. First, their product, then their balance sheet. Product-wise, we are talking about the technology behind transaction facilitation. So many think that Visa is all about lending to consumers, but that's all on the banks. Consider Visa your middleman, meaning they avoid the risks of lending and capitalize on all the fees every time all of us swipe our credit cards. Now, the second reason that I love Visa is for their balance sheet. The company is just a money printing machine. Now, thanks to our ignorance on Visa, usually in uncertain market conditions, when spending goes down, Visa's share price goes down, and right now we have it at $263 per share from $289 per share a few months ago. But this is all about the long game, right? So go ahead and zoom out to 420% worth of appreciation over the last decade. The question now is, do you have the patience to literally reap the real dividends that Visa is gifting us with. And speaking of which, for holding 19 shares, I received $9.88 thanks to Visa's dividend yield coming in at 0.79% while growing year over year by 18%, all on a 15-year track record thus far. Now, in terms of the future, analysts foresee upside of over 20% with Visa, coming up to $316.63 per share. As for my opinion on whether or not it's a buy, it is indeed, and I'm hopefully going to just crank up my position with Visa to 100 shares. Now, the very next day, Johnson & Johnson, ticker symbol J&J, sent me a dividend paycheck, which I know I don't need to really introduce this one to you, especially if you're a dividend investor. You likely just know that this is a dividend juggernaut, which is why years ago I worked very hard to scale my position with J&J up to 100 plus shares worth of this medical device and pharmaceutical giant. However, it has seen better days. We can see right now it is in fact in the red, trading for $146 per share. That's closer to the 52-week low with a PE at 21.1. But stop to think about J&J's oncology business, which has a strong long-term outlook due to continued growth and late-stage assets entering multi-billion-dollar market opportunities, while also focusing on bringing TAR-200 to the market for bladder cancer. It should be a matter of time before we begin to see this stock actually gain some momentum. After all, after a century worth of delivering through on appreciation just this past decade, about 80% worth, hold tight. Personally, that's what I'm doing, just holding, as my position with J&J is 100 shares, which allowed me to receive $126.08 from J&J thanks to that dividend yield coming in at 3.39%, continues to grow by about 8% year over year. But here's what is most noteworthy. While analysts rate the stock a buy with almost 20% worth of upside, hitting $175.69 per share, smart money is very bullish. They've been buying 1.4 million shares of J&J last quarter. Next up, let's go ahead and skip to the mid-month here for a play in real estate with Realty Income, ticker symbol O, which, given our interest rate environment right now, making loans harder than ever to come by which, well, REITs and the alike thrive on, debt, it really has been struggling. As we can see, it's down by almost 6.11% on the year, trading for $52 per share, making it a ripe opportunity if you're looking for some real estate monthly passive income. But zoom out, we see over 91% worth of appreciation, which matters because you can see here that through the ups and the downs of all the uncertainty in this last decade, Realty Income has only thrived, all likely thanks to their sizable portfolio with over 15,000 properties, maintaining one of the highest occupancy ratings in the industry thanks to their 1,500 plus clients paying rent. Now, analysts foresee upside into the future, 16% worth of it coming up to $61 per share, while hedge funds continue to load up last quarter, buying almost 1 million shares worth of Realty Income. Now, the Realty Income team has actually used this time, these challenging times, to buy more shares. Back in March, we see almost $8.5 million worth of shares bought. But where do I stand right now? Just a holder, given I maxed out this position for myself on 114 shares, allowing me to receive $30.01 thanks to the dividend yield here at 6.03%, growing by about 5% year over year for the last 20 years, and a dividend streak here for 55 years. Now, investors, 3 dividend payments down, 4 more to go, but before I cover the rest of them, I want to ask you for your help outright. So far, 71% of you watching my videos are not even subscribed, which is better than just a week ago at 73% and 2 weeks ago at 75% when I shared this with you. Either way, my goal is to get that number down to 50%. In exchange for your help, I can only guarantee you that I'm going to work even harder on your behalf to produce more content like this, deliver more stock ideas, share deeper depths of macro insights, and get better guests for masters of the market. All in all, I would be greatly appreciative for your help. And while you're at it, let me know that you're actually getting value from this specific portfolio update video by tapping on the thumbs up button so I know to actually continue this series. With that, we'll talk about some McDividends with McDonald's, ticker symbol MCD, which is not just your fast food behemoth, but a secret real estate powerhouse, which is personally why I'm in love with McDonald's and an investor in it. And as you probably have seen, McDonald's has been in the news lately as inflation is just crushing consumers and forcing menu changes for McDonald's. Bottom line, the stock is down right now by 13%, trading for $249 per share, a PE at 21.6, which to me remains an opportunity, especially as we zoom out to see over 223% worth of appreciation over the last decade, thanks to McDonald's McDonald's continued expansion around the world and overall popularity. Now, can they remain relevant? I think so, and as an iconic fast food leader, well, analysts think so too, bouncing back by about 23% to $308.92 per share. As for me, I'm going to hold my 5 shares, received $8.64 thanks to their dividend yield at 2.67%. Now, it's been growing quite quickly by an average of 15% year over year over the last 20 years with a 47-year dividend history. Next up, a company that never in a million years would I would have actually have thought it would made the cut for a video like this on dividend income. We have Alphabet, ticker symbol GOOGL, or better known to all of us as Google. Now, need I say anything more? No. It's exactly what I thought. It's the world's largest search engine, the owner of the world's second largest search engine, YouTube, and also runs with the cleanest balance sheet. Now, Google has really just become a secret powerhouse in my portfolio, and now that it's a dividend stock, I'm even more in love with it. Over the last decade, it's soared by over 520%. It's up on the year already by 31%, and as per the analysts, it's just going to keep climbing with a projected share price of almost $200 per share, hitting $199.25 per share. It's almost 9% worth of upside from here, whereas hedge funds have only just been buying. As for me, I own 89 shares, all purchased back when the stock was at $98 per share. Now, I received $17.80 thanks to the Google dividend coming in at a 0.44% yield. Last but not least, Lockheed Martin, ticker symbol LMT. It's the world's largest defense contractor and one of my prized holdings, given the world's just ongoing need for new defense technology, especially Uncle Sam, who, by the way, is in fact their largest client. I do believe that Lockheed should in fact remain on everyone's watch list, and from all the mayhem last year and well into this year, whether in the Middle East or over in Ukraine with our allies, we see Lockheed is up by almost 5% on the year, trading for $466 per share, PE at 17.1. Be long on this one, because zoom out, you'll see over 286% worth of appreciation over the last decade. The long term is certainly where the magic comes from. Analysts are also predicting upside for this share price to hit $489 per share. Now, I personally own only 10 shares worth of Lockheed, received $32.75 thanks to the dividend yield coming in at 2.7%. That's continuously growing by an average of 16% year over year. So now that concludes my dividend income from dividend stocks, but just for having some dry powder or money on the side in a Vanguard settlement fund instead of my savings account, I received another $179.09 in dividends, given their settlement fund is in fact vested, bringing my grand total for the month of June up to $404.25. However, have a look now with me inside my dividend tracker to see that we are now averaging this year $107 per month, and just look how far we've come. I mean, in June of 2021, I brought in $108. Now I'm doing that monthly if you average it out this year alone, as we work our way up, smashing through last year's annual dividend income total of just over $2,200. But investors, this journey is our journey. So let me know how much dividend income you brought in during June from dividends. Let me know your top performing dividend stocks or how you plan to actually close out 2024 with a bang. Comment all your thoughts down below. Be sure you're subscribed to the channel, and I'll just make this really easy for you. Click right here for more insights now.